6 million one trade.
I need to watch that movie. Um, yeah, I'm back with another lesson. So today we're going to be looking at how to trade the lunch hour macro. It's actually a 2 hour period, as you can see here. It begins at 11:30 to 1:30, right? And then the key factors, you look at who's making money before 11:30. So in this case, you can see that right before 11:30, longs are making money, right? And then their stop loss will be, you look at any liquidity formed after 10 o'clock. So in this case, 10 o'clock is here. You can see that we had this swing low formed. It formed after 10, right? And already you can see the accumulation, the purge, the bearish market structure shift right here. You're inside now the lunch hour, which is after 11. Obviously, they're going to retrace to whoever is making money, which is in this case, it was these longs here, these guys here. And this week being NFP week, you can see how many times price revert back to this CB and also coloring outside the lines right there. Ideally, you'd want to see it remain. Actually, this fair value gap here will just push it lower where I was executing from, because I called this live, and then on Discord, you can literally see how impulsive this candle was. On a good day, I would start doubting this trade, but since it was NFP week and we were still below the purge, which was still closest above here, I was just confident in it to say, okay, I'm just gonna wait to see if it breaks and closes above this PPR. Also, this PPR is very important because it's the first fair value gap after 10 that was created. It's in a form of a BC that got violated with displacement going down, retested, fully filled it after violating it right there. So it became a balanced price range like that because price has been offered in both directions, to the upside, I mean to the downside and to the upside right there. Went lower, went above it one more time when the purge was occurring, and then we created a bearish market structure shift. So I had confidence to say I don't want to see price close above this PPR again. So that was like my third PDRA after the fair value gap, and also that order block. I had the PPR as my third confirmation, because if price violates 3 PRs, then you know that your ass is next. All right. And then midway, somewhere in the middle of price moving away from the purge to where liquidity was, we saw a gap which is in the middle of that movement to the downside. We call that a measuring gap. Price in most cases would likely leave a gap, and it will not trade to that fair value gap because it is very heavy and it's looking to engage the sell side liquidity after 10. Okay, and also we had another nice setup during the 1250 to 110 macro. This is just very algorithmic because look at the three drivers pattern going into this macro after clearing the sell side liquidity formed after 10, and then there was a change in state of delivery. This cannot be random when you can clearly see the smooth edges. So the smooth waters invite rocks. We all know that smooth waters invite rocks. Even when we were youngsters, whenever you look at a dam or a lake with smooth waters, you feel, that urge to throw some stones in there. That's how the sharks move in the market. So this is very smooth. This is very smooth, too clean. And if you look at the macro, it's already setting up a buy program to engage those highs. So there was a beautiful, beautiful trade. But let me go on my Discord to show you that I actually called this live when it was happening. So I sent a message yesterday on Discord to say, hey, I'm looking at NQ post 11:30, and I said, who's making money and where are their stops? This is what the time here was 6:38, which in New York time it was 11:38 somewhere here. Now I'm just gonna show you my trading view. This is the actual trading view now. 638, just somewhere here. I was actually executing going short inside that fair value gap and going short again and going short inside that fair value gap one more time. Actually two more times. So I was actually very confident in this trade. I kept sharing this on my IG. People who follow me on my IG, obviously you guys do since you're my students, they know that I was actually, bearish and sharing all the movement going all the way down and my partials and also that partial. So let me show, because I can also see the framework, which is in this case the AMD accumulation, manipulation, and I was ready for that distribution phase. So midway, okay, I don't want to do this now. Let me just do that. Okay. And then in the middle of the price moving from the purge, the crime scene, to or implied dealing or implied draw on liquidity here, we saw a gap that was never filled. We call that a measuring gap because it in most cases you find it in the middle. So if it's in the middle like that, we expect this to happen in price action. You see, this is the 50% of this range from that high to the low. You see this gap is in the middle of that, so you don't want to see price trade back to it if it's heavy and if it's gonna reach the target that you're aiming for. So this is very algorithmic. This is very algorithmic. So typical you know lunch hour week, lunch hour macro, and price action. So let's look at the 1250 macro. After clearing the 10 a.m. sell side liquidity, you see a three drivers pattern going into the 1250 macro. That is also very algorithmic. After generating buy side liquidity, this is very smooth because you look at the high here. It's actually lower than that high, so this is too smooth. Smooth waters are meant to be jagged. All right, that's where the sharks, that's what the sharks look for. Areas of liquidity, very smooth. So you see the three drivers pattern going into the 1250 to 10 past 1 macro. As soon as this candle crosses above the two consecutive down close candles that cleared sell side liquidity here, you expect a buy program because it's already initiated, and it's not just initiated at a random time. This is very specific, and that's why I actually took out the 8 contracts that I had on when that occurred. Okay, that's when I took out those 8 contracts, but the first ones were actually cleared, and when we reached the negative 1.5 standard deviation. Obviously this was found after measuring the manipulation leg here. That's the negative 5 standard deviation. How far below sell side liquidity can the market go? That's how you know that you take the nearest standard deviation below sell side liquidity. That's when you get your pinpoint entries, as you can see right there. That is very beautiful. So yeah, that's it for today, guys. It's just simple, it's just straightforward. The lunch hour macro begins at 11:30. If everything aligns and the narrative is supported, and you can see the setup, you can see the framework, either be it an AMD profile, which is what I'm showing you here, accumulation, manipulation, and the distribution phase. It could also be the a market maker model that you're using as your framework. If that's what's clear to you, then you can employ that. This was very, very, very nice and clean, and yeah, hopefully I'll be live on Discord soon and trade with and trade with you guys live soon on Discord. I mean the public Discord. I'll find some time this year. I'll go public. Maybe I'll go live maybe like once a week on the public Discord, and then I'll be fully trading with the bootcamp guys almost every day. So I'll see you guys either on my YouTube or on my public Discord if you're obviously not in the bootcamp. So that's what I wanted to share today. Hope this was very insightful. See you guys on the next one. Cheers.